I'm just going to read what they said in the article about neobanking on the continent. They said the author predicts that by 2030, banks will be invisible, connected, insight-driven, and purposeful. So I don't know, Dr. Tomisin, if you want to kick us off, being a traditional bank, what have you seen? What kind of changes have you seen in the banking landscape over the past few years?
Thank you very much, Akaego. And banks, I think there was this popular saying that people need banking, but they don't need banks. However, by 2030, we still have banks. I don't think that digital will completely take over banking and all banking will all be fully digital. 2030 is 8 years away. We're still going to have the grandmoms, you're still going to have the grandpas, you're still going to have the older population that do banking the traditional way. We're still going to have in Africa people that like to go to the banking hall and visit the bank because it's their social outing for the day. And we're going to continue to have a hybrid. I think the future is more about a hybrid. It will not be 100% digital and no brick and mortar, but it will be a case of finding the right balance between brick and mortar banking, digital banking, and ensuring that, more importantly, we can serve our growing customers. Yes, in Africa, we have a very young population. And for us in Ecobank, we have seen a situation where we have reduced our branch banking estate by 50% over the last 5 years as we pushed into digital banking. But we reduced it by 50% based on branches that people are no longer coming to, but we have not gone away to say that there will be no branch banking anymore. So we have something that caters to the needs of those who want to do traditional banking. We have the digital, and we are big in digital for those who want to do digital banking only, or those who want to do a hybrid. When you want to come to your banker and discuss a mortgage or discuss a car loan, and when you just want to do your payment and your transactions and you want to do it all the way. And there are some that, wow, you can do it online, but no, I'd like to talk to somebody. I want to get that feel of talking to somebody. So the future, I think, is hybrid. I don't think it will be fully digital. Neither will it be fully brick and mortar, but we'll find a good balance somewhere in between where the needs of varying types of customers will continue to be met. Thank you.
Cool. Well, Odunayo, just as in the non-traditional, I don't want to say banking space because you're not fully banking yet, but in that space, what has been your experience?
Well, I think that the invisibility of the banks that the author is talking about isn't essentially that banks would disappear. It's that the influence that we see banks wield now from a power perspective will begin to dissipate, and that's true, right? I think that there is something to be said for people beginning to diversify banking, so to speak. People say banking is necessary, but banks are not. It's a matter of centralized power versus decentralization of it. Over the past 5 years, what's happened in fintech, specifically in Nigeria, is that you've seen the suite of financial services that banks used to offer alone become unbundled, where you're finding several fintech companies picking one niche and then presenting that service. Now, I do think, to his point, that there will be a rebundling somewhere in future, but I think it will look different, right? People will begin to layer on services, but they will layer it on in more automated fashion. They will layer it on in smarter ways that make it slightly more seamless, more accessible, cheaper, more democratized. And I think that's what we've seen in fintech so far. Look, when people talk about banking versus the unbanked and financial inclusion, we seem to think that the only people that can be financially excluded are the people at the bottom of the pyramid, but that's not true. In 2016, asset management in Nigeria was really just kind of out of the reach of young people. That's what necessitated fintech, right? It's not that people don't want banks to exist, it's that we want banks to be accessible, we want banking to be accessible. It wasn't. It still isn't. So when you talk about financial inclusion, it's not just the unbanked, it's the people who are banked, but not particularly properly banked, right? We had a 1 million naira threshold for investing in treasury bills, 2015, 2016. In Nigeria, we had an average entry-level income of 150,000 naira. We were essentially telling a lot of young people who make up at least 80% of Nigeria's population that we're excluding you, or you have to save without touching it 6 months of your income to be able to invest and get returns. That's banking, they're included, but are they really included? That's what we've seen fintech try to do. So decentralization, so to speak, unbundling, accessibility and democratization is what we're going to see by 2030 happening, which is the invisibility that the author might be talking about is more around. There is so much more people being able to access these services from wherever they want to access it, like he said, and that way there is more reach. So the system as we see it, as we know it now, will not exist as is. And I generally think that's a net positive.
So we can say the customer is probably finally king as far as banking.
Well, they will be.
Or they will be.
They will be king. I think it's going to move from being what the banks want to what the customer wants.
Yeah. Right.
The customer is coming back to claim their position, and customer is king.
That's fantastic. So Michael, just coming to you now, there's been a lot of talking about this unbundling and stuff. Can you just talk a little bit about the role of technology in this changing landscape that we're seeing as far as banking services is concerned?
Sure. Well, I spent 15 years of my career on Wall Street building very large technology systems for Goldman, Bank of New York, and then the last 10 years on the ground in rural Africa, experiencing what customers actually want, to your point. And I think what's been happening in Africa is that we've seen traditional, conventional banks under a lot of market pressure from telecom companies, right? Mobile money. And everyone is of this wide view that mobile money is eating Africa. But in fact, mobile money is now under a lot of pressure as well, because mobile money has benefited from an artificial market condition where telecoms have controlled short code access, right? So if you're a provider of any type of financial services product that wants to use a phone to access your customer, most of your customers in Africa are not affording smartphones and not affording internet data plans. So the only way they're accessing your technology is through a feature phone using USSD. Who controls access to that? MTN, Airtel, right? And they've done so for 10 years. And if they don't like your business model, if it's threatening them in any way, they will not turn on your short code. And that means you're out of business. So that's given these guys, these telecom companies, a huge advantage, right? And they've put banks under a lot of pressure. They've offered very convenient services at much lower cost, and it's the consumer has benefited. The consumer has benefited for sure. But now we enter an age when the smartphone is becoming more affordable. It's becoming more accessible. And what can you do with the smartphone? You can download an app off the internet. And with that app, you can start doing payments and banking and other services. All of a sudden, the telecoms don't have the same gatekeeping control over access to these types of financial products. And now the telecoms are under a lot of pressure. In the same way they put pressure on the banks, you're seeing the send waves of the world putting pressure on the mobile money providers, right? Where does this ultimately lead, I think? I think it leads to a price competition, right? It can't be a feature competition because a savings account is a savings account. How much bells and whistles can you add to a savings account? How much bells and whistles can you add to a payment service? They're pretty much commodity products, right? So the only competition space is price. And you're already seeing a drive to zero. And when you get to zero, things start to look very, very interesting. What does the world look like? The world looks like commodity technology, commodity financial products, right? The customer has endless choice. The customer is king. Who wins? Whoever owns the customer. Who has developed the customer's loyalty, trust, understanding? They win. That customer is staying with that provider because they like that company, they like that brand, and that brand knows them and has built a relationship over time. So we think that it makes sense to focus on the king.
That's interesting. Yes, I agree. I have to agree. So you wrote a book. You wrote a book titled "The Banks Strike Back."
Right.
What does that mean?
Well, it means that, of course, I love fintechs. This is not the point. But banks will not disappear. The banks are mandatory in our economy I just remind you that banks, their job is to mobilize the local savings in order to finance the local business. And this function is absolutely necessary for every society. So the issue is what is going to become the bank? And we speak about the customer is a king. I think the customer is going to become a dictator. This is the next trend. And so therefore the banks needs some tools that will allow him or her to adapt and to follow what the customer wants. And since we are getting in a more and more open world, the customer is attracted by many different actors that are not banks. So my job and my vision is that banks are going to capitalize on the digital age in order to get more features, more flexibility, more adaptability. Nobody knows what the bank will be in 2030, but I know it's going to be different. And I know that if they don't have the right tools, they will not be the way they should be to serve the dictator.
What kind of tools when you're saying?
I'm speaking about a digital banking infrastructure. Right. Today, the banks all over the world are using a very old technology as a core banking. We're speaking about technologies that was designed in the 70s. And I find it absolutely remarkable because this technology still work and still serve the customer. But this is the end. You know, this old infrastructure can always be adapted, but it's costing too much money and it's taking too much time, and they will never be able to follow the evolution. So our job is to bring the next generation core banking in order for the banks to have this quality of adaptability, etc., to fit with the new need. And this is what I foresee. And I foresee a bank that is going to be closer to the customer, certainly, partnering with the local ecosystem. I'm often saying that the bank is going to leave what I call the safe culture, the vault culture, and go into the ecosystem culture. They're going to make partnership and connection with fintechs, but with also many other companies that they will be cooperating with to serve financial services, digital financial services, to the dictator.
Interesting. Just, and we can't have conversations these days without talking about COVID. And many sectors and many parts of the economy, I mean, Africa as a whole did not suffer as badly as the rest of the world in terms of death rate, but we saw a lot of impact in healthcare and in education and those types of sectors. And I wonder, Mukwandi, if you can just speak to your experience. Do you think that COVID accelerated the adoption of innovative technology in the banking space?
Certainly, I think COVID actually brought home the requirement for digital transformation because everyone had to have access to whatever forms of services, but they couldn't move around the way they would like to. And so as Zanaco, our own experience was our staff, first of all, we couldn't close certain branches and we had to make sure that they were ready and able to serve the customers. So it was a health issue. It was a sanitization of the branches and monitoring and creating the capacity to deliver that. The customers themselves, in some instances, required certain services that previously we had expected them to walk into the branch to get service. And so we had to now shift our modeling and transform into what we thought would be perhaps by 2030 when the customer becomes a dictator. So our view overall had to change. Our stakeholders, our engagements with the regulators, our engagements with our boards, our engagements with everybody had to shift, and we had to all go digital, even in some instances before we were ready. I agree with you that particularly for Africa, I don't think COVID had as big an impact, but we all had to move into the current age and perhaps into the future. And that just demonstrated to what extent technology can facilitate moving into the future. So I agree with the comments that have been raised earlier as regards, are we really going to be able to serve that future customer? Are we really going to be able to serve the future community? And we need to reflect as commercial banks. We need to reflect as fintechs. Are fintechs the new banks? As they become big and they're able to then grow that customer base, what does that look like? And should we now be looking at putting all together the ecosystem that works for the customer and works for everybody as the cake gets bigger? And those are the thoughts that we've been dealing with as we dealt with COVID, as we're dealing with the new disruptors, as we're dealing with Ukraine and Russia. There are all sorts of things every day that will disrupt us, and how we're going to respond to that and make sure that we remain relevant for the future and we own our customers.
Fantastic. So in talking about how we stay relevant, I just want to dig a little deeper into the work that you all do. Odunayo had talked about the unbundling and how there would eventually probably be a repackaging of it all. Dr. Tomisin, at Ecobank, you guys have this whole open philosophy or something of that sort where you are partnering or empowering fintechs. You know, is this an attempt to repackage and rebundle? What's behind this initiative you're doing at Ecobank?
See, you can call it an attempt to repackage and unbundle, but we realized earlier on that we are a Pan-African bank, and our vision is to be a world-class Pan-African bank that contribute to the economic development and financial integration of Africa. And looking into the future, our view of the future is that banking will be a hybrid. Banking will continue to have customers wanting to buy banking at the price point that they can afford, not what the bank is willing to sell. It means that we need to have improved technologies that we could not, like he rightly said, we will struggle with older technologies that were priced for the traditional current and savings account, where you could charge the customer and the customer was at your mercy. Now the customer is going to dictate to you from what Michael said at the other end in terms of that. There'll be a competition that will tend to a price to zero. How do the banks offer solutions? We felt that the solution was for us to co-create, work with with fintechs, work with everybody, big techs that want to be able to deliver either banking services or payment services into Africa, and partner with them such that we can get that economy of scale and make our rails available that enables us to drive that financial integration across Africa. We see it in terms of that we're in a unique position to help reduce the unbanked, both from the perspective of the bottom of the pyramid and the perspective of the middle of the pyramid, if we put it that way, where it is not actually that they don't have access to banking, but they don't have access to a little bit more sophisticated banking products that enables the quality of life, that enables the growth of capital, enables the ability to accumulate capital and wealth across Africa. So we see it as a whole strategy, and we call it Ecobank as a platform, where we are lending, where you can call it, we are renting out our platform, our rails to other financial institutions to enable access into Africa and an overall upliftment of the continent.
Interesting. So you work with multiple banks across multiple jurisdictions, and we see what Ecobank is doing. What's your experience with banks generally? Do you think banks are moving fast enough and pivoting fast enough as far as catching up with the challenge from neobanks?
Me?
Yeah.
No, I don't think they are. but again,
you're sitting right
because it's easy. But it's easy for me to say that. Of course, they are not, but they have constraints. I mean, it's complex. A banker has to deal with regulation. It has to deal with his legacy system, which is like so heavy. He has to deal with, as you said, some old people, some young people. I mean, everybody doesn't go to the same pace. So of course we push so that it moves, but it's not us. It's the competition. I call them the threats. The telco, the GAFAs, the central bank cryptocurrency, all those kind of things are coming, and it's eating a little bit of the value chain of the bank. And if the bank doesn't move, they're going to eat more and more. So the goal is to help the bank to move faster. And this is very important. And I want to add something from what we said earlier. My vision of digital doesn't mean dehumanization. It means rehumanization of the bank. A bank today, when you go in a branch, when you have 20 people in line, when you have one guy that you don't know on the other side of the cashier, it's not human. the goal of technology, and it's going to take time, but the goal of technology is to bring back the human in the center of the banking industry. And this has to be built. And we have a lot of solution ideas. The agent is one of the way, but all that is depends on technology, because behind all of that, you need security, authentication, irreproducibility, all those kind of things that cannot be done just by a piece of paper. It has to be done with some sophisticated technology. And this is why banks need to move as fast as possible to the digital era.
You know, if I may just add to that before you change it. All these need to be provided at a price point that the customer can afford.
Right.
And the competition is no longer between Ecobank and Zanaco. Neither is it between Ecobank and PiggyVest. The competition is with Google, it's with Facebook,
That's right.
it's with Ant Financial. The competition is with everybody. And when the customer wants to buy banking, the customer's expectation is that I want it as easy as my Amazon account.
Right.
I want it as easy as my Facebook and as cheap. Amazon don't ask me to pay for anything. Facebook don't ask me to pay to use their service. Why is my bank asking me to pay? So we need to reinvent. Yeah. We need to keep at the game, and so that we can ensure that the customer becomes a dictator and we can serve the dictator.
That's right. That's right. That's right.
Although you're talking about the customer, because of course this comes down to the needs, and you know, you've in the unbundling, you've picked one banking service. So I know you're not yet a bank. I don't know if you will become a bank, but you've picked this one service. And just talk to us a bit about your shift. So you rebranded and you went from just a savings platform to an investment platform. So can you talk to us about that shift and how the markets, the customers have responded to your product?
So no, they didn't have to respond because they were the reason that we made the
Fantastic.
shift. And that is like what speaks to, you know, why is my bank asking me to pay for this?
Right.
I think like for years, I think customers have been speaking. I think it's just a matter of listening to them and meeting them at the point of their need. I don't think any user from Nigeria to the US to Uganda, Tanzania is hidden about what they want from financial services, right? It was clear when we started PiggyVest. It was clear when we pivoted from just a savings to a savings and investment platform. It is clear today, right? So the data is there. The customers speak every day. Inbounds from channels like Twitter, Instagram, Facebook, in person, right? Every single time you sit down to listen to a user, you are getting data on what they want to see. And so when we started as piggybank.ng in 2016, we said we will allow you save daily, weekly, monthly. It was because we saw young people in Nigeria with an average of 2-3 bank accounts saving in actual wooden boxes, right? They existed. They had bank accounts. I had 3 bank accounts at that point, but we saw people my age looking for boxes so they could put their 1,000 naira in it every day. Why? There is a gap there. It was clear, but it wasn't being filled at the time. And when we evolved and grew with the users, in 2019, a lot of people were saying, we've grown this amount of money. You've allowed us to save it. What next? That's when we introduced the investment marketplace. So I think that for all the simplicity and all of that, the most important thing is the humanity at the center of it. The humanity is there right now. We just have to find it. So it's very optimistic to think that where we want to be will be there in 2030. I don't think that banks are going to suddenly center the people by 2030. But I think it's important that the lessons that we want to see, the image that we want to see in future, we start to understand that we can actually just start now. The people have always remained the people are very vocal. Every single day, if you search the name of whatever institution you represent on Twitter, there's millions and millions of people expressing their opinion about it. What do you then do with that information? What do you build with it? Right? What kind of solution would you provide for them? Investments, credits. 99% of Nigeria is uninsured. There is an answer to that problem. Where is it? Right. When you open a bank account for a user and we're charging them every single thing it takes to maintain that account. Now, I don't think there are no costs. I just think that understanding the fact that half of Nigeria lives in extreme poverty, the remaining half of that half is earning below par. There is a stat that's flying around Twitter today, for instance, about how many people earn more than 60,000 naira per month in that country, right? There is ways to accommodate those people. And that's the humanity at the center of providing the services to them. Infrastructure is great, like fintech is amazing, but all of this has to be an answer to something. What is the question they're asking? They've always been asking it, and it will serve everybody, banks, fintechs, whatever service you're providing, to make sure that you are answering the right questions, that you are solving the right problems, right? So that like at the end of the day, like you don't go out of business. I don't like to say customer is a dictator, customer is a king or anything like that, but I do think they have a voice. And if you want the customer to grow with you, to pick you as the service that they're going to like grow with and evolve with, you have to be answering their questions. You have to be meeting them at the point of their need. You have to be providing the kind of services that they need. Is it credit? Is it savings? Whatever it is. It's the same like question when we talk about financial inclusion. And for us, it's mostly about building these digital services for people at the bottom of the pyramid without like finding out what their problem is. Every time I get asked, is PiggyVest going to serve the bottom of the pyramid? I'm going to tell you no. Because we are a digital financial services platform, and a person who lives on less than $3 a day, the answer to their problems is not a digital savings product.
Right. That's excellent. Saying that, Michael, you serve the bottom of the pyramid.
He does, and very well.
So yeah, because you're talking about all this, I'm like, how do you even do it and stay profitable? Like, because you're like, you have to do it at the price that is suitable for the customer, but then still a business you're running, and you're saying, you're not serving the bottom of the pyramid. Someone has to, yet, or at the moment, but you serve the bottom of the pyramid. So maybe you can speak to that. And in speaking to that, is there a form of education that needs to happen to customers at that level? Is there a cost to that? And how do you actually do that?
Well, I think you're absolutely right. It starts with asking the right questions. My journey in Africa started 10 years ago when I was curious to understand why rural people weren't using conventional mobile money at the level that everybody expected. And you would imagine they would be using it, right? Because a lot of people had access to phone technology, but didn't have access to bank accounts. So they had access to these products, you would think they'd all be using it. So we started asking the wrong question. We started out by asking, why are you not using the products that are available? And they gave us reasons, and we overcame those reasons. We were asking the wrong question because we should have been asking, what do you actually want to do? What is your need? What problem would you like us to solve? Not why are you not using the solution that's currently in the market? And over time, the customers taught us a very important lesson. Payments was not very interesting to them. Digital payments was not very interesting to our rural customers. For all the shortcomings of physical cash, people are pretty happy with physical cash, right? It works. They know where it is. They know where they put it. There's no transaction charges. They don't have to trust any intermediaries. They were pretty happy with physical cash. What they really wanted was the same thing everybody in this room wants: more money. They wanted more income. They wanted to know, how can we get more income? The answer has always been historically, let's just give people more loans. Somehow thinking that if they take more loans, they're going to invest all that money in some income generating enterprise, and that's going to lead to more income for their household. Except for the fact that in South Africa, 94% of loans are not going into income generating investment. They're going into consumption, right? They're going into medical expenses, weddings, burials, paying off other loans. So loans are actually not generating what the customer wants, more income. So what we discovered is there is a way for customers to get more income if they can learn how to save. If they can set aside, as you guys are doing so well, if they can set aside a small amount of money, doesn't matter the amount, the smallest amount, 30 cents a week. If they can set aside a small amount every week for 3 months, 12 times, right? They can achieve a saving goal. And if we can direct that accumulated savings into an income generating investment, for example, buying some coffee seed, right? Expanding their coffee farm, maybe trading a little more coffee this season, or maybe opening a small side business, a shop, getting some inventory, right? They can turn that 12 weeks of savings into additional amplified income. That is something very, very real. They see that income, and in most cases, it's the first time in their lives they've achieved a saving goal and turned that into additional income. It's game changing. It's game changing. As soon as they've done it once, they will do it again. 50% of the customers that go through our program continue the cycle. They start again, a new goal, and they're off and running. So what does this do? This does a couple of amazing things, right? It allows customers to bootstrap their way into what they actually want, more income. At the same time, it's generating a level of engagement with our banking platform that leads to understanding and ultimately trust. And trust is what we're all trying to build in the banking business, right? Once you've got your customer trusting your account, you can roll out any products you want. Payments, insurance, anything. You need to capture the customer's trust. So we found that focusing on income generation is absolutely the best way to onboard new unbanked customers into the banking ecosystem. Once they're there, then you start introducing payments, you start introducing cross-border payments, merchant payments, blah, 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 right? So how do you actually build this trust? How do you go through this process of giving customers this understanding of real income generation? Well, our experience has shown us it takes an enormous amount of effort. You actually have to visit these customers physically. You got to sit with them, hold their hand with their phone, with their cash, transact with them. Not once is not enough. It's got to be every week for 3 months.
How do you pay for that?
How do you pay for that? How could that possibly be a profitable business model, right? That's what everybody asks me. Well, this is what we spent 10 years trying to figure out how to do. Ultimately, it's about logistics, because you have to send trainers to these customers who speak their local language and who are known by the customers. Otherwise, they won't even listen to them, which means you're hiring trainers out of the very community that you're serving. These people that you're hiring don't have any mobility. They don't even have bicycles. So you've got to provide the motorcycles to get them to the top of the mountain to meet with the customer. You can't do this door to door. It's far too costly. So you have to tap into existing communal aggregations. Everybody goes to church on Sunday. Guess what? We're going to church on Sunday. Teachers all meet for lunch every day. We're going to the lunchroom. Farmer groups meet once a week. Let's go to the farmer group. Savings groups. Let's go to the savings groups. Find the existing aggregations. There's your economy of scale.
Interesting.
Send your team on your motorbikes, optimize their routes, minimize your fuel, get really, really cost conscious. And you know what? You can acquire customers at $3 per customer. It's the absolute lowest customer acquisition cost in banking we've even come across. I think Revolut is $15, I believe, is their number, which is great compared to the banking average worldwide, but it's not $3. So if you can figure out a way to achieve this level of trust at such a low customer acquisition cost, I think you can build potentially the largest network of active revenue generating banking customers. And that's what we're trying to do.
Interesting. So we want to come to Southern Africa now. We've looked at the bottom of the pyramid, the middle of the pyramid. We're still talking about customers. Zanaco, thank you. Zanaco, I read that you received multiple awards recently for innovation and service delivery. So can you talk to us a bit about some of these products? Because you're obviously pushing back at the challenge of the neobanks and trying to make sure that you push your digital banking. So how is that process going?
It's going great. I think what is clear to me personally and to the Zanaco team, shout out to the team over there. What we have been able to do is to shift from internally focused conversations to externally focused conversations. And so having done that, we identified, first of all, our own strengths and what we could bring to the table. Because even if you ask the right questions, do you have the right answers? Do you actually have the solutions that can deliver to that expectation on the other side? And how do you then make sure you deliver accordingly and both sides gain value? That's been what we've been working on for the last 18 months to 2 years in Zanaco. And I think we're getting somewhere. We actually were the most profitable bank last year in Zambia. Fantastic. And we also were able to put together solutions that have given us those awards. Zanaco, it's not now. We stand on the shoulders of giants. It's not just now that we've been innovative. Going all the way back to the first mobile banking app, Zanaco was the first to do that. before any fintech. We actually have a subsidiary that is a fintech that is also rolling out. What we've realized is that the shared economy is the future. We can't just look at only Zanaco. How are we going to also serve the rest of the community, and perhaps jointly with some of what is viewed as our competition? So those are some of the initiatives that we've had in Zanaco to just say, rather than to compete, how do we collaborate? How do we make sure that we're able to broaden that perspective and gain in the process so that everybody wins? And that is how we've been winning those awards, partnering strategically with various initiatives. And at the end of the day, making sure that on the other side, we have a happier customer, and a happier customer is ready to then bring on board more business.
That's fantastic. I mean, I know that there's a panel next door discussing regulation and stuff, but I think I'll be remiss not to have a conversation around regulation as it relates to banking services and neobanking. And I'm just wondering, maybe Odu, you can talk to us a bit about your experience with regards to dealing with regulators in this space. We know what it's like generally for fintech, but at least maybe speak to the Nigerian experience, and then maybe you can speak to, we can hear from others.
Right. Okay. Yeah. I think that regulation, I'm going to just really localize it to Nigeria and know what obtains the rest of Africa. Egypt is really friendly, I hear. But Nigeria was in the beginning very difficult. And it wasn't difficult because, it was difficult because both sides of the table didn't have an understanding. I think it was more like the opacity of the entire licensing and regulatory process that led to that difficulty. So when we started out, it was really hard going for 2 years. And, it was maybe 3, 4, probably 5 fintech companies in Nigeria at the time. It was unclear, where do we go? Who are we in the grand scheme of regulation? Where do we fall? And because we didn't have answers to those questions, we didn't know where to go. We started out, partnering with a microfinance bank. And then we partnered with a commercial bank, and eventually we acquired our own microfinance license. Okay. But even then, it still wasn't we still weren't sure. So I think that today, conversely to those days, there is a lot more clarity. The SEC is creating sandboxes to allow fintechs kind of play around, and so is the CBN. So I will say that it's, as of today, it's friendlier than it was in 2016. Now, we're not where we need to be because, there are certain services that we can't take advantage of still. For instance, the ease of crypto in Nigeria, that's still a very sore subject, right? We understand the cons, but there are pros that I think that we should be able to take advantage of that we can't. But I think that ultimately the solution to any of these things is understanding. Right. The same way we've made a lot of progress with wealth techs and neobanks, getting to the point where they can apply for licenses and get it. We still have conversations going, but there is so much progress there that we're launching fintechs by the day now, maybe 4 launches every day in Nigeria. And that's progress. That's because they have an idea now of where they fall. Is it a PSP, PSSP? There's several different kinds of licenses covering different kinds of operations now. And in 2016, it was just microfinance from the SEC and then, the regular banking license. So I think that's diversity, that's reflecting the diversity of the sector, I think is progress. Now, I think we have a ways to go in terms of figuring it all out. But being able to have these conversations with regulators, being on the same panels as them, being able to walk now into the CBN and have those conversations, into the SEC and have those conversations, I think is where we want to be. Right. We're playing catch up, to the rest of the world in terms of all of these things. But I think that for everything that we've been able to show, especially we have several unicorns now and they all just came right after the other, is evident that regulation is actually almost where we want it to be. So Flutterwave's success, Supercash's success, OPay's success, all of these people's success, they're all in fintech. Is evident of regulation and regulatory authorities that want to be progressive, and that's a good thing.
I know that's Nigeria, and it's 54 countries and the experience is probably different everywhere. Maybe we can just hear what it's like in Southern Africa and then we can just maybe wrap up.
I wouldn't be able to speak to Southern Africa per
speak to
se,
Zambia.
but for Zambia,
Yeah.
there was an earlier panel where someone said it's not a United States of Africa.
No.
So it's not Southern Africa.
Okay, let's
it's,
speak to Zambia.
So Zambia specific, like all regulators, I mean, it's a similar conversation to the one between the fintechs and the banks, right? Where the fintechs view banks as these traditional dinosaurs. But actually, there's a lot that is based on a lack of sitting around the table to understand one another. And I think the same applies for the way that we view our regulators. There's always a place where they're coming from. And a lot of the time, because we are so focused on getting what we want, we don't take the time to really align ourselves to where they're coming from and what it is that they're trying to drive. At the end of the day, they're looking after the consumer. They're looking after the public, and they're looking after that interest. So sometimes when we have the conversation, for example, Zanaco, earlier this year, we went to the central bank and we said we wanted to launch a cryptocurrency exchange. And they said no. And we were so offended. We said, but you know, this is the future. Why can't we do it? And we had the conversations and tried to understand where they were coming from. We also had a similar conversation with regards to climate change and the bond that we were trying to put in the market. They keep saying no. Everything that's new, they say no. But that's because they're in a comfort zone and they don't want to take any risk that could impact the population. Right. So we had to now take a step back and say, okay, how do we educate our regulators? We're still in the process, but it's something that we have to do. Right. We just have to take the time to engage them, get an understanding of where they're coming from, and they should also understand where we're coming from, because we don't want to end up left behind. This is the future, and we need to be able to play in that space. And we believe that we're now at the seat, at the table, and making good progress. But it's not an easy conversation with the regulators. But I do believe that we're all coming from the right intentions.
Fantastic. Thank you guys so much. This has been a very enlightening conversation. Thank you.
Thank you so much. So for those of you interested in learning about ESG initiatives and how fintech is driving them across the continent, this panel is happening in the breakout room, and it's being facilitated by Emmanuel Elemu, co-founder and managing director of Betam Group. We are getting